Hi, welcome to the Market Alert for Friday, the 1st of September 2023. So bond stocks, commodities and crypto hit in hawkish August as dollar soared. The landing could be a little more bumpy. Well, I mentioned yesterday that the dollar was at the 200 MA and we could expect to see it move higher and the metals move lower, which is exactly what happened. US stocks were mixed on Thursday, with the Nasdaq outperforming the SP 500 and the Russell flat, while the Dow actually lagged. Well, today it won't make much difference what happened yesterday, because today it has arrived. It's the non-farm payroll numbers. They're out at 1:30. The market will be looking towards these numbers, so it could be a fairly quietish morning as the market waits for the 1:30 release of these numbers. They're forecast to be a lot lower, 187, 169. If they come out at 169, it will be bullish. If it comes out higher, it won't be, but it will then be turned into bullish as they revise the numbers from last month. That's how it works. So Fridays, they don't like the market down on a Friday, but you never know. The markets were down yesterday. 3 p.m. we got the ISM manufacturing PMI as well. But let's kick off with the markets. Let's have a look at the Dow and see what happened during yesterday. So we can see the Dow was down yesterday, trading up to the 78% retracement for this market, holding there, a bit of selling around there as well. We're overbought at the moment, so the market needs to hold above the 20, the 5 and the 50 EMA in order to move higher. But weakness yesterday came into the market. As you can see there, it was just down all the way till the close. Got a bit of a bounce overnight and we're above the close at the moment. So the electronic market and European market brought the Dow up. When the cash market opened at the high, the market was then sold into. In the German DAX, market managing to hold above the averages at the moment, and also 50% retracement from the high down to the low. Market needs to stay above this, take out these resistance areas here and here as well, the two pink lines. Then you've got 62% retracement above this area. 30-minute chart, choppy session to the upside during yesterday, and then following the Dow down from 4 p.m. there. You can see that move to the downside there was 100 points, over 100 points, yeah, as the market came down and then back up on the overnight, above the close, the DP, and sitting above the averages at the moment. But let's just go back to the daily chart. We've got the averages moving in the right direction. But like I said, we've got that resistance. We'll have to see what the non-farm payroll numbers are going to be at 1:30. In the S&P 500, as you saw from the headline, the Dow certainly lagged. It fell a lot sharper than the S&P did. So we're sitting at 89% retracement at the moment. This needs to be taken out if the market is to move higher. And we've got to take out the resistance to the left there, and also yesterday's high, in order to move higher. 30-minute chart, very choppy session, as you can see there. Day before NFP numbers, no surprise really. The FTSE 100 also down yesterday, following the Dow at 4 p.m. in the electronic market for the FTSE 100. It closes at 4:30 p.m. if I'm not mistaken, the same as the DAX. Market needs to take out this 89 retracement there in the daily and the 50 EMA in order to move higher. There's you can see, and then we sold off all the way down to the 200 MA, the market moving higher overnight and above the DP, so showing a bit more strength than the other stock markets at the moment. In the US dollar, 200 MA bouncing straight off it yesterday. Once the market had broken through this, it's maintained it. Again, it's going to be NFP dependent today to see if this market will move to the upside. And if so, then the metals are going to come under attack. So let's have a look at those. And starting off in silver, no surprise. I'm still expecting this to be hammered back down to where this last move started. So don't be surprised at all if they do that. Weakness there. All we need is the NFP numbers to shake that one up later today. You can see how sideways it was yesterday, then broke out to the downside as the dollar moved higher. But overnight they've tried to bring it back, but they're not going to succeed. I'm afraid not until this gets above $30 per ounce and then 50. Until that point, this market remains under attack. Gold, the same. The market sideways, coming back towards the 200 MA. If this breaks, then we'll go back down and retest the fibs and also the support levels along the way as well. In the 30-minute chart of gold, you can see we were okay until the US opened and the LBMA, and then we hammered gold. We brought it back up, and now we're below yesterday's low as well. So in the gold-silver ratio, as I said before, we were down in an area where you could expect support. You can also expect it to go back up to this top channel as well. So let's see what the NFP numbers have to offer today and what the market makes of them. So with that, have a great weekend. Oh, and while I think about it, Monday is Labor Day in the US, so it wasn't last week when I thought it was. It's this next week. So there may be a bit of an alteration to trading hours. So just keep that one in mind. Okay, that's it for this one. As ever, thanks for watching. See you in the next one.